Hello, everybody. It's Jerry Citarella with Jerry Citarella Presents one more time, and I have an amazing guest with me today who I'll introduce in a second. But please remember, like, share, follow. What else? What else can you do on a social media page?
Keep watching.
Just share the heck out of it. So yeah, Jerry Citarella Presents, where we try to bring you all kinds of great information, not only in my industry of financial planning, but related industries. And my guest today, Luke Rebenzer, is in the similar type of, he's a money guy.
Yep.
But he has a really good story, some life lessons, did some stuff I wish, gosh, I could have done, play a little college football. We're going to talk about that. So very, very interesting guy who I had the fortunate pleasure to meet your wife recently.
Yeah.
And then she introduced me to you, and this is how life works. We just meet people that are interesting and have something valuable to share. And I guilted him into getting on my show. He's way too busy, but here he is.
Yeah, thanks a lot, Jerry. It's
So
great
Luke
great to be
Rebenzer,
on.
RX3 Growth Partners. Did I get it right?
That's right.
Wonderful.
Yep.
So I'm going to say it, and then we're going to go back and forth. You are in private equity.
That's right. So we sit in, technically it's growth equity. So we're kind of in between the full buyout strategies like the OG KKRs of the world, and a little bit different than the VC funds like Andreessen Horowitz, but somewhere in the middle. So looking at scaled consumer-facing wellness, health, active lifestyle types of brands. I think that's kind of a middle ground of venture and private equity is right where we play.
Okay, so to simplify that,
Yeah.
you ever watch Shark Tank? Right?
I would say Shark Tank is a very, accurate representation of how we operate.
Loosely represent, yeah.
That's right.
So people are always interested in investing, and people are always interested in ways to make money. And the reason I'm excited about having you on is I've been hearing a lot about people wanting to invest in private companies. And that's, again, what you do. And again, going back to the Shark Tank story, is there's these companies that are, well, good or bad. And they're always looking to grow, and the thing that's needed more often than not is funding.
That's right.
And also good partnerships.
That's right.
So that's where Shark Tank was bred from. These are all people who are investors and invest in companies, and you go present yourself. And if it's a good deal, then these investors who you're familiar with on that show will give you money and hopefully guide you through the process.
Yep.
And that's not unlike what you do. It's just not as
Yeah,
public.
That's right. And I think, in those shows, it's a 5-minute pitch, and there's a lot more that goes into it, especially on our side when we're, there's a lot of financial diligence that we have to do, brand diligence, all of those legal diligence, everything. So, in Shark Tank, it's a 10-minute process before from pitch to investment. In ours, it's typically about 4 months before we meet the brand, and then we're writing the check at the end.
And as I understand it, even on Shark Tank, there's a little due diligence that goes in on the back end before everything is officially signed. But yeah, so let's start with the basics and then kind of build from there. So the basics are me as an investor, anybody watching.
That's right.
Would have the opportunity through you to invest in companies that they couldn't otherwise have access to through the public markets.
Right.
And the example I was using earlier is I get a lot of people to say they want to invest in SpaceX.
Yeah.
Elon's other company, or one of his other companies, and you can't. It's a private company.
Right.
And there are investors in SpaceX, but through private equity
Right.
and different opportunities. So that's where you live, is giving people an opportunity to put money in with you and your company to then have it further invested in these.
Yeah, I mean, without getting too granular, we're a captive fund. A bunch of investors kind of contribute to one bucket of money, I guess, and then our job, we have full discretion over this capital, is to invest in those brands. And so, take SpaceX, for example. If you have, $100,000, SpaceX is a $100 billion company. They don't need $100,000, but investing into a fund like ours, where we invest somewhere between $10 and $20 million per deal, maybe they need 20 million. So it's kind of a strength in numbers game where, we have more capital to put to play. We also have some really talented advisors. Some of our co-founders can add a lot of value. And so when a company is looking at receiving an investment from us, it's one, more capital, more dollars to put to work, and then two, some strategic value on the back end as well.
Okay. So you mentioned dollar amounts, 100,000 or 10 million, 20 million in SpaceX. We talked about SpaceX, but realistically, Are you looking to invest in a company? Let's just use SpaceX as
Yeah.
that's already established, strong, and maybe just needs a little money for some expansion. Are you looking more for startups?
I'd say it's somewhere in between.
Okay,
so
somewhere between.
It's, what we typically look for is a company that has a product, proven product market fit. So the company is doing well. They're selling their products, whether that's online, whether that's in retail, or it's not just products, but they have something that people want, and it's not like seed stage. It's closer to kind of Series B. So typically that's about $25 million in revenue on an LTM basis, and looking to scale. So all in all, a proven product, a proven business model. Now they just need some fuel to the fire, maybe some, like I said, some strategic advisory work that we can provide to take them from that 25 million in revenue to 100 or 200, hopefully.
Okay, so you're in I'd call it a more comfortable space where you're not
Right.
You're not working with some guy with a napkin and an idea who says, I need my first dime to, because that's obviously huge potential returns.
Right.
But the risk is greater.
Yeah.
So you found a place that works and fits for what you guys do and what you're good at.
Yeah, and I think as you work up that chain, from the back of the napkin, in our world, we call that like pre-seed or I guess like founder capital. Yeah. But it kind of goes pre-seed, seed, Series A, Series B. And I think the number is 1,200 Series B companies in the United States today, and versus hundreds of thousands seed. So it's a funnel game, right?
Yeah.
And the lower down the funnel you get, the less risk you take on, and the less your returns are. So we typically, and I would say, the quicker pathway to sell the business. So if you're investing in a seed company, you're probably waiting. Yeah, on a good day, you're waiting 12 years, and you may make 100 times your investment. In our stage, we're trying to get 5 times our investment in 3 to 5 years. So still a lot more risk than something like the stock market or 401ks or anything like that, but a shorter pathway to liquidity, and I guess still higher returns than you'd normally receive in the public markets.
Yeah, with good due diligence and good management. I mean, there's no reason to believe that these things are extremely risky where someone shouldn't consider them.
Right.
Because it's not the seed level.
That's right. Yeah. And they're also taking on bigger checks. Again, kind of going back to your example of a single individual investing in a seed startup. Like, number one, this is what we're doing all day. We're looking at companies, we're on the phones with founders. So we're doing a ton of diligence up front just based on the pipeline approach alone. And then on the back end, like, we're investing in scaled businesses that need a few $1 million to go kind of take them to the next level.
So once you get in play, there's a really good chance that there's been 2, 3, 4 other rounds of funding, each one of them with a different level of risk, obviously, and a different promise of returns. And
that's right.
You guys come into the place where you're comfortable, and there may be other people before you, so there's some proof of concept.
Yeah, and I mean, there's a business, one of our favorite portfolio companies called Truvani, a protein powder brand. They had done an amazing job. They had never taken on capital before, scaled to our strike zone, and we were the first, I'd say institutional capital in, but we were the first investors, period. And so, there are kind of outlier cases where a bootstrap company comes to us and they're in our strike zone, they're making money, they're selling their products, and it's a fit for us. But generally speaking, yes, it's kind of the venture stage. Investors will invest here, we'll come in here, and then we'll sell to a private equity firm at the end of it.
So I know you have some name recognition for various reasons, which we'll get into.
Yeah.
But ultimately, there's bigger companies that have been around longer, and there's some large institutional companies that have divisions. And so why would a company accept money from you versus one of them? Do they just not offer as much because they're bigger? How does that work, where someone would say, I need $40 million and I'm so good I can go anywhere, but we're going to choose RX3?
Yeah, I think that's a great question. And frankly, I think that's something that every brand out there that's raising capital should strongly consider. Like, it's great to get capital. Like, to grow your brand how you want, you typically need to take on outside capital. But I think it's very, very important to understand who your partner is in this whole process. And so, a company like us, we're typically owning somewhere between 3 and call it 15% of a business. And so, we're relatively hands off. We're there if the founders and the management team needs us, but we're not going to come in and say, hey, you need to change everything. I think given our expertise in the diligence process, we can kind of uncover some things that, maybe they didn't have the time to see before. And all right, we can really go and change these things to optimize the business. But I think what we're good at is the kind of brand marketing approach. So we invest in strong brands. We have about 50 of our investors are kind of strategic partners, so athletes, celebrities, entertainers in that space. And what we look to do is build out a strategy. A girl on my team named Kristen, who's exceptional at it. She goes into the brand, partners with the chief marketing officer typically, and says, these are the 15 people on our cap table that we think would be excellent fits. Let's build a strategy around them and help grow the brand organically through them. So I think we're on the marketing approach. There's other investors similar to us that maybe they're on the supply chain or distribution or operating focused. But I think with us, we're looking at great brands that just need fuel to go grow.
Now, are all your brands public? Like if we look up your name, we can see who you're using. Is it transparent, or are there some that are more private in terms of what we would be investing in if we put money with you?
Yeah.
Do we have full disclosure on what we own?
So you would, yes, absolutely. And every time we make an investment, we're doing our outreach to our LPs, writing letters, quarterly updates. It's pretty exhaustive work. And
okay.
I take the brunt end of that.
Okay.
But yeah, every investment we make, we're filling our LPs in. You're not usually knowing about the investment until after we invest.
Right. You don't want my opinion.
Right.
Hey, I heard you're going to invest in this and I don't agree. No,
that's right.
Yeah, you don't
if
want
we
that.
took everyone's opinion, like we have an investment committee and
it's their job.
That's what we get paid for is to, I guess, present our ideas to the investment committee in a clear and concise manner. And then it's the investment committee's decision to go through with the investment. Yeah. So,
well, and it's interesting because I know in my world, we manage money, we manage assets,
right.
we have our own portfolios, and it ends up we have money in the same company, Hims and Hers.
Oh, there we go.
Yeah, it's one of our companies that we like a lot on our side.
Yeah.
Now as a public company.
Yeah, right.
And as a company that you liked a lot for some funding that you guys do. So there can actually be some overlap.
Well, I think kind of backpacking on that point, we say we're consumer investors, and I think look at Hims, and we just did a round in Function Health, and I think when you look at the consumer wellness landscape, there's so much overlap of healthcare and just being the better version of yourself, whether that's through some app like Function or some products like Hims and Hers, or even through a CPG product like Truvani. I think like it's becoming so symbiotic with everything that we do, both as consumers and as investors. So it's a lot of fun.
Okay.
Yeah.
So again, or anybody watching could have the potential to have you guys take control of their money.
Yeah.
Have their money mixed in with yours.
Right.
And invest in these products that they would otherwise never have access to.
Right.
Most people, the only opportunity they have to invest in something private is when their crazy uncle says they want to open a restaurant and guilts the entire family in and write them a $10,000 check.
That's right. Yeah.
This is real deal investing. And so let me ask you this question about, I mentioned you and others. There's other people that do this.
Right.
So if it's you and one other company that's similar, and you're both going after the same deal, and they're choosing, what do you? I mean, do you just sell yourselves? Is there some little?
I think at this
trick?
point, so we were founded in 2018, and so in the first 5 or 6 years, I wouldn't say we got boxed out of deals, but I think it was harder to pitch ourselves because it was more of an idea. Now we're at the point where we have case studies. We've sold 6 of our companies so far. Like we have things that we can point to and say, hey, look, you're kind of in the same stage as this brand when we invested. Here's what we did. We built out their TikTok shop. We, built out their social media presence across the board. We, brought in some new folks on their digital marketing strategy. So now we have real case studies that we can point to and say, look, what we're doing, we haven't made it yet, but it's working, right? Okay. And so I think it's easy to point to real statistics and say, hey.
The more success you have, the more success you have.
That's right.
And then also you mentioned to me in a lot of conversation we had, correct me if I'm wrong, that you have some, let's call them bigger, more established companies like yours that are now bringing you into deals.
That's right.
As a part of their overall contribution, which is wonderful.
Yeah, I think so. 75% of our deals are kind of in that, growth stage. And then I talked about like traditional private equity. about 25% of our deals are in that private equity bucket where, they're multi-billion dollar deals. The new investor is owning 80+% of the business, and they're bringing us in because they see that, look, we're, they buy a fitness chain. We just did Crunch Fitness, and we came in with Leonard Green Partners and said, look, we can kind of build out this marketing strategy. Fortunately, the company's doing exceptional so far, so we haven't had to really do much yet, but we're kind of in the back pocket when they need us.
Cool. So I want to ask you one more question about your opinion on something, and then I want to talk about your partners and, kind of teased a little bit some names and stuff. And so there's a cool factor to you.
That's right.
And then I want to get a little bit in your history as well. So I was talking to you about this, and I'll just say the name, Robinhood.
Right.
Robinhood is a platform for people to invest money, and they've kind of marketed themselves to probably smaller investors. It's a great place to start, and they're big in the cryptos and more of the risk stuff. And you can go there with $20 million and work with them, but they have a lot of younger investors, a lot of startup people. And just the other day, now I heard that they're creating a private equity opportunity within Robinhood, and I think in their words, and I could be wrong, to give anybody the opportunity, which means if you got $500 or $1,000 and you want to invest in private equity, now in your opinion, because I'm all for everybody trying to make as much money as they can in any way they can, but it has to be risk appropriate. You have to have a full understanding of it. And just because Robinhood says you can do it doesn't mean you should.
Right.
How does that make you feel as someone who understands this if they're telling 21-year-olds with no life experience, no investment experience to now put their money in private equity? And how do you think that works in terms of building out that platform when these people may not understand liquidity needs?
Yeah. To be honest, I'm not super familiar with the Robinhood model yet. I know what it does, but the private equity model. I think what's interesting is when I first got into this space, you can ask my partners. We'd see 10 deals a day, and I thought 2 or 3 of them were great. And you do some work on them. You say, hey guys, this is a great business, and everyone's poking holes in it. And you ultimately realize that there's so many early stage brands that don't make it because of whatever reason. There could be. I think that's what's a little bit different in investing into private businesses versus public, is there's so many different variables.
Right.
The public businesses are paying millions of dollars a year to be audited and to
extremely transparent.
Right. They have to
8K, 10K. Yeah, there's
they have to have every single thing, kind of every stone unturned. When you're a private investor, it's your job to find them, not to go. You can't find them on Google.
Right.
And so
your title is Stone Turner.
Exactly. And so there are so many different things that can go wrong in a early stage private investment versus a late stage, either pre-IPO or post-IPO public company. I guess on the flip side to that, I think that for really forever, since private equity was kind of created, it has been the rich get richer game, because you have to have a ton of cash to get into the business. And now, I guess I think there's an opportunity for folks who may not be worth $10 million to come in and want to invest. And I think that's appropriate.
I think it's a great opportunity. I just hope they give a proper education on what's
100%.
Realistic expectations. Yeah. And they're not just forcing money into places that shouldn't go just because. So, okay, enough on that. It's just, I see these things that come up. There was one in the real estate world where just, you see people on TV, TV, there's no TV anymore. You see people on social media and these other places that are selling something that sounds too good to be true. And
usually it is.
Usually it is, yeah. So, okay, so I want to get this wrapped up a little bit, but let's just talk, maybe go a few more minutes. So you have one very, very, very cool partner in this firm, one of the founding partners. Yep. And then other people that have some big names that maybe are underground, but who's your main partner that everybody would know?
Yeah, so in 2018, Aaron Rodgers and our 2 other co-founders came to the table and said, look, I'm seeing all of these, cool early investments. I don't have the time or the expertise to really go through them one by one and say, this is great, this is not. So why don't we create a true fund? And so they went out to a bunch of other athletes, celebrities, high net worth individuals. We're now getting some institutional capital and created this fund called RX3. And in our first fund, it was a little bit more venture focused, so like seed and Series A, going back to kind of the trajectory of private capital. And it's been a good ride. I've been there for 3 years. I can't take any credit for the inception story, but just understanding kind of where they were and where we are now today, like it is awesome. And, Aaron's on the cover, but we have 50, 60 other folks in there. Some of them are my good friends and stuff. And it's a great platform we've created.
So I know this is going to be corny and full dad joke, but is Aaron Rodgers kind of quarterbacking the team, or is he just kind of sitting on the sidelines coaching, or what's his position in it?
He's got a day job at least for the end of this year.
Yeah,
so,
yesterday was a rough day.
Yeah, he's one of the smartest guys I've ever met. We meet with him, once or twice a year and kind of sit down and give him the full update. But he wanted the team. He wanted to build out the back end team so that our backgrounds are in banking and private equity, and we can bring that expertise front and center. And he's very helpful on the back end.
So he had the relationships and the contacts to do the initial money to start it, but he was smart enough to know he needed smarter people. Right. But he is still actively involved.
He's actively involved. He's very up to date on everything we're doing. It'll be interesting in the next few years if he wants to get more involved. And I think. I'm sure he can be very helpful.
Up some time.
Yeah, that's right. Yeah, after he closes up a 20-some odd year, amazing NFL career.
Great career. I've watched him. I mean, I was a big Brett Favre fan when he took over. I was like, but
you and me both.
He just kind of it worked, and great guy to have on the team, and one of those guys that again, not against anybody. But you look at a lot of people in sports and entertainment, and they're often loud and outspoken. Yeah. But I think he's one guy that you can look at and go, he probably understands what he's talking about.
Yeah,
put some time into it. He seems to have a good head on his shoulders.
There's been some controversial issues in the past, but I think, on a personal basis, he has done the work on the back end to at least have an intelligent perspective on it rather than just saying
without controversy. It means you're not doing anything.
That's right.
Yeah. And then a little bit into you real quick, and I know we're probably going a little long here on the football thing. I mean, you had a cool career playing college football and quarterback and defensive back and a little past that. And tell us, what was that like? I mean, every little kid grows up going, I'm going to be a pro athlete. You almost made it.
I was close. Well, technically, I did play professionally Canadian football. So
I mean, how cool was that?
Yeah.
You get out of high school and you go to college. Where'd you play?
I played at Cal. Grew up in Scottsdale, Arizona. I went to high school called Saguaro. We won. I think my senior year was the first of 7 straight state championships. We had four players on the Arizona Cardinals at the same time out of my high school. So, anyways, built a powerhouse program with our old coach. He's now in the college ranks and everything. Shout out to Jason Mons. Anyways, got the opportunity to go play in college. Tremendous experience. A little bit different college career. Started at quarterback. Was competing with Jared Goff, which a couple people might know. Now one of our investors as well.
Okay.
And good.
It's a tough place to be.
Yeah.
Really.
Good buddy of mine till today. But sophomore year moved on to safety, and was able to see both sides of the ball. And I think, not to get too far into college sports, but there's all this talk about the transfer portal, and you have guys that are going to 4 different schools in 4 different years, and I think
now maximizing contracts and all
exactly.
That, yeah.
And I think what I'm proud of is I had the opportunity to transfer. I could have gone to enough places. I could have had options, and I decided to stick it out and get my degree from a great school. And I think if I would have had $1 million thrown my way, which I probably wouldn't have, but it would have been really tough to stay. And so I think now, the college world of the world of college sports is getting further and further away from the academics. And frankly, if you're a great college player, you can last 2 years in the NFL and never play again. So
then what?
I think, if I had any life advice to someone out there, it's go through the adversity, build your character, and have a long-term vision, and aspire to be great, but be patient in getting there because it takes time.
I love that.
Yeah.
And no matter what opportunities you have, remember you always need something to fall back on, and that's the educational piece.
That's right. Yeah, I think you're one play away from never playing any game again, or never doing anything again.
Look at Scadaboo.
That's right.
He's probably coming back.
Yeah.
But
yeah.
I mean, it was 5 games into maybe this exciting career and this renewed energy, and out of ASU where my daughter goes.
Yeah,
I go there with my Tillman jersey, so that's I respect all the things ASU.
Yeah,
no, you are always one play away, and in business, you're one mistake away.
That's
so
right.
You always have to have a plan B and make sure that you have stability built in.
Right.
Going back to my career, what I do is building those core plans. I don't think everybody should have all their money in something like you.
100%.
I don't think everybody should have all their money. So we build the stability piece of it so you can do other things on the side of it.
Right.
And then we can work together and I can refer my clients to you. Or if you're watching this and you want to go direct, we're going to give you a number. If you want to call me, I can refer you.
Yeah.
I think private equity is a wonderful place to be. And interestingly enough, there's a lot of companies that just aren't going public anymore because there's, I'll say, maybe more and potentially better opportunities in the private markets. And even some public companies are privatizing to go back now that there's more capital available. So I think the opportunity is great. And ultimately, if I'm just Joe Schmo out there trying to pick stocks, can I really say that I'm better than you and your team at turning over those rocks? Not really. I'm going to do it emotionally or take some bad advice from someone who knows less than me. So I appreciate what you do, 100%. So I have a football question for you.
What's that?
High school to college, and then college to pros.
Yeah.
When you're getting hit, is it like that much harder at each level? I mean, because, you know, you watch NFL football, you've been to a lot of games, you used to have season tickets to the Rams. When you're like, you know, in cheap seats, and you can hear that linebacker hit the running back from up there, that has to hurt.
Yeah. Well, I think the progression.
I know it's a stupid question, but it's
I think the progression is
we progress with it.
Tremendous. I mean, like in high school, you know, you're a highly touted recruit, player of the year. You go on to college, like you went from the best player on the field to like
back in the ranks.
I don't know, middle of the road, like probably lower half. And so it's night and day. And I think, you know, that's why you see very, very few true freshmen that come out of high school and just play really well or dominate. And then you take, again, it's like the cream rises to the top is what they say, right? So you have, you know, the 2% of high school athletes going to college, and most of those guys don't even play. And then you have the whatever, I don't know what the stats are, 2% of college kids go to the NFL. And so, you know, you have like the NFL, I think the biggest difference just from watching it, obviously not playing it, is just the speed. I mean, you have defensive ends that are weighing 290 pounds running a 4.6. That was as fast as I was when I was playing safety in the Pac-12.
Yeah.
So, you know, it's an amazing, I think now as a fan, it's an amazing game, and it's an amazing progression to watch, you know, guys in college and then go to the NFL. And, you know, it's kind of like, it's humbling to see them struggle a little bit. And then after 2-3 years, they catch their speed, they understand the game, and, you know, they use their intelligence to their advantage, and they go, you know, be great. So it's fun to watch as a fan.
And I think that translates perfectly into what we're talking about, the different levels of expertise in these fields.
Right.
And, you know, in high school, everybody can get a couple plays in and maybe be okay. But once you get to the higher level where it's more important, bringing in people who have that experience and have that ability and are used to the speed and are used to the big hits and all the analogies we can do, and having them on your team, I think, is important. So, Luke, I appreciate you being here. Like I said, I'm getting a lot of questions over the last, I don't know, year or two from people that are just interested in this world of private equity. And I don't know if it's Shark Tank that got their attention or just whatever it is, but I'm real happy that I can have you on and you can kind of explain it a little bit. I wanted to get a little bit more into your situation and some life lesson stuff, but let me just summarize it. You're not old. You kind of said what year you graduated, I think, and you know, you're a young guy, relatively speaking, in a great position, and I just think it speaks volumes. And I was going to talk about that a little bit, but I don't need to, because if anybody watched this, they understand why you are where you are. You're well spoken. You're very intelligent. You're a good thinker, ambitious, and you know, I think this firm you're with now is going to have to pay you a little more to keep you someday. With what I think you have to offer. So congratulations on that, and just, you know, tell Aaron I said bump up your points a little bit, because he needs to keep you on board.
Yeah, I appreciate you having me on. It's great to chat. And
great. And thanks for helping educate the people. Again, Jerry Citarella presents, not just what I do, presents other things that I think are important, people are interested in, and I think this is a valuable show. And thank you so much. So share, like, all that stuff. If somebody wants to reach you directly, is that a thing?
Yeah, shoot me an email. Luke@rx3growthpartners.com is the best way to reach me.
And it's Luke, just a normal Luke?
Yep, or LinkedIn. My last name is Rebenzer. I think you probably have it on here.
Rubenzer, we'll do that.
That's right. And so I'm always happy to chat with investors, companies, however I can be helpful.
Yeah, or reach out to me and I'll connect you.
That's
whatever works. We live in a world that's easy to find people.
There we go.
Luke, thank you very much.
Thank you. Really appreciate it, Jerry.
Thanks for tuning in, and we'll be back with another show soon.